It's the crypto sniper. Yes, the sniper is on the rampage, and he's a bear still, I'm afraid. For most of what you're going to hear from me, it's going to be to the bear side in terms of crypto. And we'll give you a couple of reasons. So we start with Sol. We've spoken of Sol before. We've said to you, Sol for $3.52 and sub. That means it runs through that. That could mean all the way to zero. It could mean $1, $2, but that still requires a lot further downside than it is currently, where it's currently trading at in and around 1341. We weren't really believed too much, particularly when it was in and around the 40s, and we were saying, beware the grind line, it's going to spill. That we were also saying about Bitcoin during that time, round about here. But during the period that it was trading 47.50, everyone thought we were bonkers. We did, of course, call the very top of Sol with the final last upside HVF. So the notion that we're a perma bear is not accurate. We have actually been bullish. We also said the failure to make new lows here showed relative strength for Sol during that bull period. That was the falling wedge for Bitcoin that only managed a 69 run after the 64 run. That was the 64k run Bitcoin. As you can see, Sol super outperformed during that period, and we had suggested that you should buy as long. Those YouTube videos are still up. So when we are bearish, and we've been bearish for a sustained period, we have some form in terms of both crypto and this token in particular. So that spiller, that thriller got a lot more people focusing. That would be the FTX fail. And as I say, despite the prediction, I didn't preserve myself from the fallout of that. So you can only be so clever. And we remain humble before the markets, as always. And the notion of what goes down on any further move to the downside through 3 is not going to be generally bullish for crypto, and anybody trading this is going to have to bear in mind the possibility of counterparty risk, so decentralized exchanges and using your own wallets, plus the possible failure of stable coins, Tether, USDC, any of the others. Don't forget, at the moment we seem to be picking up a fair amount of FUD on the stable coins as well. If you're watching USDC, USDT, etc., anything is potentially questionable. It is a little bit how I feel about the larger financial system, for which this crypto system seems to be very much a microcosm, and maybe a little more advanced in terms of its contraction. Has a large part of it played its role, keeping you out of gold and silver? Yes, there'll be survivors. No, blockchain's not going away, etc., and it will be refined. The notion that you can have Bitcoin released one layer of code and that's perfect, version 1, you'll never go 1.1, 1.2, 1.3 ever again, is a bit peculiar to me, but nonetheless, there are a lot of maxis out there. So anyway, Sol, further downside, what are we looking at? Well, let's take it down from the daily, which I'm looking at the moment, and you can see that target, and just run you into that piece of price behavior that you're seeing. You'll notice before I leave this time frame that it has paused and done exactly what we expected it would do. Let's stay with the TG Pink, in fact, at all the key levels: funnel, bounce and run, and wind up at the funnel. Last big funnel, this one over here that I've already referred to, and you could see you got a holding bear structure that needed this wind up to break it. Ignore the blue line for now. We're talking about this green and the red line that came all the way from here. What is the blue line? It is the nearest, roundest, logical number that has served as the neckline for our extended head and shoulder on this particular pattern. Let's get that 5 out there, it's worrying me. So that is the $30 mark, which actually sees this then be a macro left shoulder, right shoulder, and a head. And that is where the $3 and 52 cents emanates from. So again, we remain bearish on Sol, and as I say, if I drop this down into a lower time frame, I would argue that you will find this particular price behavior looking a little sketchy, very much in the descending triangle type level, and of course sitting in that same little funnel range that we've highlighted was significant last time. So often you need that wind up and break to break properly through it. Who else and what else have we spoken of? Recently we also reminded you of ADA. Well, I'll show you quickly on that front as well. I would feel that obviously the reward potential on Sol is higher, just given the scale, but I would imagine many tokens would be losing quite a lot of value unless it's very specific to the FTX stroke Sol situation. Let's get that a little bit jumpy when you're in the log scale. Let's get that just to give you an idea of what the potential for the risk reward might be. Man, you are so annoying doing that bloody. Look at what this chart punks are doing to me. Just take that damn lock off and stop messing around. There we go. Let's have it back. That's a look at the regular time frame, by the way. You can see how much this has already given up since its 260 highs. When you see it in irregular terms, man, this thing has already bled. And the bear is not over. I don't think it's all out. All the bad news. Back to the log scale. And we get that target in there, and you'll get a little bit of a better idea of what potentially is possible for a rundown. That would still be a 10.23 if you put that stop on the other side and you jumped in right now, or very close to the bid and ask spread. Okay, I promised you ADA, so let's have a quick look at ADA. But before we go past ADA, the hexagons always want to have news. I don't have any good news for hexagons. It's going down in my view. It's now spent 10 days sub the 3 cents. It's had a return move and now it's slipping. The sellers are dumping. And very similar to Sol, it has a very foundational HVF funnel down here. A very foundational HVF funnel down here. I will highlight to you that this 3 was a substantial period of temporary support, rally, weak rally, bump, dump, caught it, bump it again, dump, and now just a return move barely above and letting go. So after those 10 days below, it has now just done a return move to that range and is slipping. This is bearish as well for crypto, but this is particularly bearish for this token, and I will also show you the dominance on this token. So what else could be shorted? By the way, by booking a call, the real opportunities to make money in reset times. Things fall faster than they go up. And I'm afraid it's a go down kind of market for most risk on assets. So if we just go have a look at that dominance on Hex, this is what they're typically referred to as a descending triangle. Again, log scale, because we're looking at a big time frame. This is not healthy. You're desperate to hold the 0.6% in dominance there, and you're bumping along this bottom, and I see these descending highs leading to a point where you break to the downside, and this will be a higher beta slip compared to other things. Also, some people alleging, this is just commentary that I've heard, that SAC money is being moved across to support this level. So isn't it funny that someone, if that is true, of course, I'm not saying too much further than that. I've asked him for an interview, and we will see if he agrees. But wouldn't it be ironic that someone purporting freedom and sound money suddenly became a central banker trying to hold a peg on the dominance and the 3 cents, just about trying to keep up at the 2.83 cents mark on their chart. This is the Twitter handle that was highlighting it. That's not it. This is it. 26.5 million got transferred out of a SAC address, gone through Tornado Cash, and he alleges was being used. This was one such that he found. So who knows what's going on there, but this is a time where many people that are walking naked in the ocean will find the tide going out on them and be exposed. Okay, so ADA, let's pop on down to ADA. So ADA, we suggested, was a flag and had a downside HVF, and that flag has now surrendered itself to a bit of downside action on the Sunday open. So we want to cover a little bit and educate you crypto folks a little bit on the general world market. Little stab through, not chronic, but a little stab through, shows a little bit of an absence of bid there. Why might that be? So for that we pivot to the traditional markets and we give you a breakdown there. So what's happening in the traditional markets? Well, one of the opinions that I have is that the debt markets are starting to rally again. And remember what I said about dollar strength and the debt markets. Yield climbing on the 10-year, that is what it's paying, will push the dollar back up. We've had a dollar retrace during this period, and now you are facing the potential of a dollar climbing. You're certainly getting the yield climb. Of course, you will get some numbers this week, and this will be a key day. Let's just remind you, you can go to Forex Factory if you care to find out, or be caught by the volatility when you forget, if you don't, that there will in fact be, during the course of this week, there will in fact be, let's just get that into week mode this week, when you're ready. So all we're looking at are the red squares of fundamental news that will come out. USD CPI month on month and year on year is coming out Tuesday. Tonight is Sunday night, late in the morning, don't even ask why. Core CPI, CPI month on month. This is inflation heavy data that's going to be coming out. This is going to be really relevant for the dollar because it will determine what the Fed ends up doing. Federal funds rate meeting on the Wednesday, plus a statement and economic projections. So we should generally be looking at the dollar. This is going to be a really important week for the dollar. There is, of course, news. Bailey will speak. He'll probably have a whisper in his ear what the Fed is doing. He doesn't want to be caught short this time, not upping rates by a similar level. So you will see what happens. It might give you a little bit of an early look in on what Britain does, because when they tightened less strongly, they had a pound and a debt crisis. Money flows from where it's treated worst to where it's treated best. And if someone else is going to pay a higher interest rate, that money will flow from one side to the other. So think global macro hedge fund all the time. The big powers that be don't have the same problems moving their big ass money around that you might. So anyway, so that's federal fund rate. So quite a bit of news, and the expectation broadly is that there's going to be a USD 0.5. 0.75 would be very hawkish. 0.5 is going to be unpleasant but broadly expected. Anything lower than that would be deemed dovish in terms of the Federal Reserve and its plans. However, this falling wedge has now tightened and broken, which is exactly what we expected. We said, is there a possibility of a head and shoulders? I don't really feel it. There's not really been a significant enough right shoulder. In truth, you could try and make a case for this, but I think the dominant structure here, in fact, will be the wedge and a retrace up. So this will have just turned out a little bit of a pullback. You might get a pullback at the key level, but that you might go. Do we go high enough for a high 2 so that we set up a new structure like that for further highs? Or will it continue up? Or will it be a weak bump and the expectation will then mean with the highs in, and actually they'll be rolling back. Very difficult to say that because February will also come and rate rises are also expected for February. So they need a crisis. They need to bring their crisis forward to avoid those rates. Many things are creaking. Something needs to break. And that's the only way. And he's going to turn the screw right into the breakage. Much longer. You're being waterboarded. And this time your head has been held in that toilet for a whole bunch longer. You're not getting the reprieve of QE and rate cuts, not getting it near as early as you want. That's how it is. So that is why I expect to see the Dixie open a little firmer, and that could mean a little bit of upside against the euro and some other currencies, could be upside against the euro itself. This one we warned on the Market Sniper, or other channel. Don't forget to pop over there, like, subscribe, hit the bell. And also, if you want to see how we trade these markets and understand more how this multiple cross-market analysis is important for understanding crypto, you can go to themarketsniper.com and book a call. 3 W's, themarketsniper.com, book a call. So do that. So with that rising wedge, you can see a loss of momentum occurring here, and the probability, as we suggested some time ago, is looking even more probable today, that you're going to get a breakdown to the downside. This is generally a bear market for the euro, and of course you get a technical rally after running the parity level, which was also indicated by our inverted HVF here that gave a similar target. So hence, progress, decay and rallies have existed, but they will not persist forever. The structural problems have not gone away. They will come back into focus. Also, we have the USD JPY. A little bit of a push off the lows there, a little dip back onto that target, and a slightly firmer open. Same for the Korean won, etc., etc. So what are you actually getting? The possibility of some dollar resurgence. So what does that mean for crypto? Generally not helpful, because they have not done well broadly, and even less well when there has been dollar strength. We've illustrated this point enough times that I'm not going to go back down there and do it again. This is meant to be short form. You can see this is not a bottom, it is more weak grinding upside. This is the line that should worry you, and you are currently breaking it after a tiny little shooting star over there. I'm not saying it will be the break to end all breaks, but this is showing softness. This looks like a surrender of this level that could get a return move before trading down. So I could see further negative news potentially making its way. This is not strength. It is a little bit of fatigue of selling, hence why you get a rally when you have such violence of selling on such bad news. Note the rising wedge again with a grind line that foresaw it so well. You could have shorted there, you would have done rather well. Will it be the same over here? As we've said before, the big targets on Bitcoin remain the level that is yet to be run of 15K, and remain to be the targets of the head and shoulder, which is just above the 15K. That would be a key confluence of levels that have not yet been run. Let's wipe the face a little bit, and there is also a little bit aggressively put in there. I can tone that down for width for a bit, can't I? The flag, the original flag. So bear flags are not as significant a targeting, but nonetheless patterns that can indeed bring about targets that see failure. So that and that I will remove, but the bear flag target is in and around 12. The head and shoulders, which is the teal blue that you see there, left shoulder, head and right shoulder, there was also a flag that did already see performance run. Note how you failed to run the key levels. You churned around here. See that there? You didn't make it to these key levels over there. You churned around these ones over there. And note again how this spill did not make these levels yet. Even here, did not make these levels yet. And you've been churning around the multiple levels that occurred over here, the 20K and a number of others. The 4 key levels that we've covered a number of times on Bitcoin for you during this period. So this looks like a wind up that is setting up for a downside smash. Anyone technically would suggest to you that that is not a bottom, it's a wind up for a downside smash, especially with the Sunday open. But that was our opinion last week already. It's been our opinion on crypto, that some people are even sick of hearing us say the same thing. But you need to keep hearing it, because as long as it remains likely valid on an on balance of probabilities basis, it's going to save you money. And more importantly, if there's even better shorts that we aren't talking about because it's in our premium area, you would find that out by going to themarketsniper.com and booking a call. Building wealth on real sells, and as I've already highlighted, when it spills hard. That is quick, powerful profits. It doesn't go up as fast as it falls. So there's real opportunity to be one in the very few that are actually making money in this current environment. Bitcoin dominance, again, we've pointed out that it battles to get away from the 40, rallying up and down a little bit around the place. We have some cross coin setups that I won't be getting into. Again, join into our premium area if interested to hear more, plus some tokens that I haven't mentioned here tonight that we also quite like, some for relative strength and some that might fall further. At the moment though, in terms of what we've discussed on free views, Sol is still a very good shout in my opinion for further downside with an extra normal potential target. Please understand that if this were to trade 352, we would have given this target from, as we and spoken of it, in and around the mid 40s all the way down, as it now stands at, what was it, $13, substantially lower post the FTX events, and there is just another push, I would imagine, before the possibility of even more shows up. So Sol is indeed a great opportunity as a short, but only if you have training, understanding, you know how to place a stop, you own your own outcomes, and you recognize it could be the moment that it's happening. It looks a little soft, but it could just have a little down leg and then still have a slightly higher and wait for a while longer. We try to pick the key moments, but you can't always get exactly the key moment, and stop placement matters for that risk reward. You want to earn the right to place that pinched risk and that hyper expansive reward. And if you're too soon, you can be run and still be long run right about the downside, but haven't eaten a unit of loss. Understanding money management is one of the most important things for you being long in this business. How does Sol BTC look, seeing as we're talking about it? And as you can see, Sol BTC itself has also continued to underperform and give up dominance relative to Bitcoin. You can see that was the wind up for the upside, one of the reasons why we remain bullish. You could see that hyper over performance, and then you saw this rounded belly, very convex, that has subsequently just seen downsides transpire for Sol, repeatedly breaking grind lines to the downside, and that break of that level was very, very significant. The failure to really rally off this very far set up a very heavy downward biased descending triangle over there, which, despite getting a rally after it had broken, ended up losing a lot of ground against Bitcoin. So just to give you an idea, remember these bigger time frames are log scale. So up top here, you're in and around 2 double zeros and 4. Now you're 3 zeros and 8. This is a substantial loss in power, and we expect that to continue. Who else is exposed? Well, we've said to you before that we had concerns about CRO. Let's clean the face there a little bit. Again, remind you, this is on log scale. It has already run and is in a very volatile state. This is a warning. This is in a very volatile state. After the FTX failures, we warned everybody to withdraw any meaningful amounts from the CRO wallet as well, given how aggressive they were in marketing and then accidentally sending 400 millions worth of ETH to the wrong address. These are not the kind of statements that bring confidence, and who knows, Did they have any funds? Were they affected by FTX? This is very, very choppy performance, down at 6 cents. Again, we warned that this would go lower repeatedly, and we gave a number of setup structures on the way down that spilt, and we were giving coverage on these for some time. Look at these setups. Perfect target over there, down, perfect target run over there, little bit of overperformance, churn, absolute FTX nightmare that took it from in and around almost 13 down to 7. That was almost a halvening on the FTX event. You can tell there must be exposure, or certainly perceived in a similar light, to have had such bad performance. That's on a daily. If we have a look on the 2 hourly, up and down like a jack in a box. This is not a token that can be treated as anything reliable or stable in the slightest, if anywhere in crypto is right now. So what are the reasons that we continue to be bearish? Resurgence and possible turn of the dollar, but more importantly, an increase in rates, a Fed heavy week with news that is going to bring to bear everyone's minds on the fact that the Fed will continue to tighten, in inflation data week that's likely to come out, which is going to be choppy and volatile. This is likely to be reflected in the crypto markets as well, plus the further ongoing potential fallout of everything that occurred with FTX that is still quite possibly not played through in its entirety. These are the reasons at a fundamental level. Then we look at the technicals and the setup and the structure on Sol, on CRO, and on Bitcoin are not pointing, and ADA are not pointing to particular strength, and are not looking like bottoms, and in fact could be close to triggering downside action. That's right, you've heard it from us. Could there be more? You can find out what else we're talking about in both FX, traditional markets, commodities, cryptos, as we go into what I suspect is most risks to the downside, a recession where you will have the major central banks tightening interest rates in lieu of an inflation that they themselves did create and are now punishing you with, as they destroy your buying power of your fiat. This is why we take remedial action against the policies of these currency destroyers and manipulators. And we aim to build wealth during reset at a time when many will be losing their shirts, losing their buying power, being inflated away in terms of their living costs, and devalued away in terms of their disposable income and buying power. This is what we're about. We're trying to counteract one of the worst mafia, rigged, globalized, contaminated games that are designed to absolutely crush your finances. It's a big challenge, and we're up to it. You want to join us in this fight back and this preservation of wealth and this building of wealth in reset times, hit themarketsniper.com and join us for this amazing journey. Until next time, I'll catch you later. Bye for now.